very warm welcome everyone to another episode of the Upside Podcast. Today we don't just have one guest, but we have two guests from completely different regions, one from Southeast Asia and another from Latin America. We have Qin En, who's an investor at Saison Capital, joining us from Singapore, as well as Bruno from Valor Capital, a US-based fund focused on LATAM, and he joins us from Brazil. So first question, the premise actually of us even come here today is a new report that both of you have just launched that focuses on Fintech, particularly in Southeast Asia and LATAM. Maybe if you could just, take a step back and could you share a little bit about how the both of you even got to know about each other? What were some of the interesting observations that you have had on your respective ecosystems?
Sure, maybe I can kick it off with a quick introduction. So my name is Qin En and I lead Saison Capital. Saison Capital is the corporate venture capital arm of Credit Saison, which is one of a large financial institution in Japan and actually the second largest credit card issuer. About 10 years ago, when Credit Saison decided to expand overseas, we actually did what was contrary to the norm. Instead of most corporations in Japan that expand globally by going to markets like US or Europe, we actually pursued the path of emerging markets, starting in Southeast Asia, followed by India, and most recently 2 years ago in Latin America. So when we landed in Latin America, of course, one cannot ignore Brazil, right, being the largest market by itself and by a large mile. And the way we enter these markets is not just through startup investments, but actually by working together with fund managers. And so we started to sort of map out the whole startup and venture ecosystem. And that was when we were introduced to Valor Capital, as they are the leading fund that is not just based in US, but have very strong and deep ties in LATAM itself. So that was also when the first time I met with Bruno. And I think since then, even though it has been a short, but it has been an extremely fruitful and productive partnership.
Hi, Kristie. Thanks so much for having us here today. It's a pleasure. On my side, I'm Bruno Batavia. I work at Valor Capital, which is a US-based fund, as you mentioned, right? But with a lot of focus in emerging markets, most specifically LATAM. But of course, as I think Saison Capital, we're also expanding a little bit. We've been investing in global tech companies more broadly, but I would say like the cross-border angle was mostly related between the US and Latin America. So I would say expanding companies that are founded in Latin America to the US markets and the opposite as well, helping US companies land and expand in Latin America. But there's a huge opportunity in other markets beyond this corridor, right? So that's why I think we started exploring more deeply Southeast Asia, Middle East in the past 18 months. I've been traveling quite a lot, so that during one of those travels I met Qin En and the team, and I think the relationship just started there, right? And I think throughout the months and the discussions, right, we noticed a lot of similarities between these regions, even though they're like several time zones apart. So that's why we ended up like doing this content. I think it'll be like a nice conversation. So we're happy to deep dive.
How deep is this corridor actually between Southeast Asia and LATAM? Because it's not exactly the first corridor that you would naturally think about, just given the distance between the two ecosystems. I think people tend to think like Southeast Asia, India, Southeast Asia, China, which we all know about very well. But Southeast Asia, LATAM, I think people are kind of like, what really? Is there any corridor at all?
Yeah, I'm so glad you raised that up, Kristie, because that's exactly the reason why we did this report, and that's exactly what makes us excited. I think first and foremost, to your point, for us, Bruno and myself, as early stage investors, it's always not just about following the crowd, right? But it's about spotting early trends, getting in on them, and making sure that we are early before the majority comes in. And today, of course, Southeast Asia, India, Southeast Asia, China are known things, right? There's nothing new, there's nothing exciting. The truth is, it's often people don't put Southeast Asia and LATAM together precisely because of physical distance, right? Today, there's actually no direct flight. It's a 30-hour journey one way to get to any country in LATAM. And naturally, that does present itself as a barrier for people to go and understand. But after having gone through that process ourselves, I think that was what truly excited us. And that's also why for this report, we really sort of honed in on financial services, right? Of course, Southeast Asia, LATAM, there's a lot of macro things that are very similar. For example, Brazil and Indonesia, the two largest countries in each of these regions, have about 200 plus million people. But I think what really sort of inspired us as an Asian-based investor was how incredible the journey Brazil has underwent. And to be honest, we all know today Southeast Asia is going through a very challenging environment, especially on the startup and venture ecosystem, but perhaps also in the fintech world. And I think for us, what Brazil laid out, it's almost like the light at the end of the tunnel in terms of what this region could become, right? Of course, it's unfair to sort of compare Southeast Asia to a place like China, where the nature is very different. It's unfair to compare it with the US. But I think really when we compare it against LATAM, we truly see this is where the region could evolve, could mature to, and could really sort of generate some of these incredible companies like Nubank and Stone. So I think that is really what got us excited. And as for why we're excited about Brazil, I think there's no better person to speak about this than Bruno. So I'll turn it to him.
Yeah, maybe sticking with you first before we jump to Bruno.
Okay.
I mean, coming from Southeast Asia, and you have had visibility on even Indian fintech companies and a couple of Chinese fintech companies, and tracking through the way that the ecosystems have matured across all of them, and of course sitting out of Singapore. When you started going to LATAM, I mean, how would you say the maturity has been, like the differences and in maturity between, say, LATAM and Southeast Asia? When you talk about them being kind of like the light at the end of the tunnel, are there certain aspects that they are a little bit ahead in, and certain aspects that maybe even Southeast Asia could be ahead in? Like, what are some of the differences between the two?
Yeah, I think some of the big differences is, in particular, once again, people talk about LATAM and Southeast Asia as a homogeneous region, right? But it's anything further from the truth. In particular, what we see is Brazil as the true lighthouse of LATAM, not just from a market size perspective, it being the largest population, largest country, largest economy in LATAM, but more importantly, the progress that they have been able to achieve over the past 2 decades, right? And I think once again, Brazil, even with this large population, large landmass, and of course sometimes challenges that they face on the political front, was still able to achieve this incredible progress. And I think in our mind, that sets the role model, right? That's why, for example, in a place like Indonesia, that's what we see this place could become, because it's very similar to Brazil, right? Large landmass, large population, a whole bunch of challenges, and yet Brazil has shown that there's so many success stories that can happen, and a big part of that is regulation. So I think that really sort of has been inspiring to us on a large level. And once again, even when you compare to a country like India and China, like fundamentally these countries have 1 billion people in population, right? So it's a bit of a different scale, because we're talking about Brazil and Indonesia that's about 200 million. We're talking about something that has 5x difference. So the real question is, can you build unicorns repeatably, sustainably, with this, let's say, 200 million population? I think the answer for Indonesia is a tepid yes at best, but I think Brazil really laid the path for us as to what it could look like, especially on the fintech front, which is of course something that's close to our heart.
Okay. Yeah, maybe let's jump to Bruno first before we get back to Southeast Asia. Bruno. I mean, I guess you've been to Singapore as well as Southeast Asia in a few times. I'm guessing. What have been some of the takeaways from your journey, especially on the fintech ecosystem and maturity side, and how similar and different are the opportunity sets, as well as the challenges, for Southeast Asia versus what you see in LATAM?
No, perfect, Kristie. I'd just like to compliment Qin En. I think there are a lot of opportunities, similarities, and differences as well. I think some of the commonalities, and we can talk about like specific markets as Brazil and Singapore as well, especially in the fintech side, right? We've been seeing an inflection point because those types of markets, which are highly regulated, right, sometimes depend on some coordination between market participants, the regulator, so what we call regulatory tailwinds, right, and also financial market infrastructures that we have a whole new trend that we call DPI, digital public infrastructures. We can just double click on this, but maybe just giving a step back and just also share a little bit of background, right? So previously, when I first joined Valor, about 2 years and a half ago, I was formerly spending many years at the Central Bank of Brazil. So I think I had the chance to look at some of the different waves of financial innovation that Qin En mentioned, right? And what were the unlocks, and how the fintech business in Brazil especially grew a lot, and why. And I think also because of some of the relationships that I had with other regulators as well in other jurisdictions. So Singapore was one of them. Nice relationship with MAS, which the Central Bank of Singapore. I knew kind of like the local dynamics in the fintech side. Coincidentally, ended up spending more time in the region. And I think that maybe you can like just tie some kind of like relationship between what's going on in terms of those tailwinds in Singapore and in Brazil, but I think Southeast Asia more broadly and LATAM more broadly. If you go through the demographics, right, it's like impressive to see that these countries in those regions. If you think about like software, even like beyond fintech, right, I'm talking about like big tech usage, Netflix, WhatsApp. Well, any kind of like TikTok, and Instagram. I would say like Brazil and Indonesia mostly are always like ranking up to first, second. So at the end of the day, it's like a highly connected ecosystem, right? And in terms of like market disruption, that's something that we're also paying a lot of attention. But going back to the fintech side, not sure how much you want to explore. I can give you like I think a broader frame, right? I think the journey in Brazil started back in 2012, 13 with merchant acquirers, right? Just like opening up the markets on the fintech side because we had like new regulations that made possible for fintechs beyond Visa and MasterCard to provide those services, right? And then afterwards we saw new regulatory tailwinds and new regulatory frameworks that allowed payments institutions also to put together services like banking as a service providers, and then like a lot of like credit activity that were being provided by fintech, a lot of the credit also coming from the capital markets side, a joint dynamic between the central bank and the capital markets authority, a very, I think, innovative regulatory body in Brazil that were able to co-create with the private sector, right? Different types of regulations and standards made it possible for this fintech boom that Qin En mentioned. And maybe just to highlight a few key initiatives, right, in Brazil, and maybe you can like just try to establish a connection with some countries in Southeast Asia. But in Brazil, we had, for instance, one of the flagship projects was called Pix, like similar to Prompt Pay or like Fast in Singapore and others, right, which is like a instant payment rail. What happened is that this rail became the most used infrastructure for P2P payments and P2 merchant payments. So just as a comparison, right, it was launched back in 2022, but scaled quite fast. It became the fastest growing instant payment rail in the world. It's surpassing Visa and MasterCard volume combined, and also if you compare with like global players, just to kind of like help illustrate, right? If you think about like PayPal, the global volume of PayPal is smaller than the domestic volume of Pix, which huge, right? And I think this initiative, I think, gave a lot of reputation to the Brazilian Central Bank and to the financial ecosystem in Brazil. And I think Brazil just went like further, right? So there were like a new initiative that was called Open Finance, which is like a broader version of open banking in Brazil, which also encompass not only in the banking sector, but also capital markets and insurance. It's much related to data, right? Data portability, because at the end of the day, if, the data ownership is yours, right? It's not the bank's. So if you are able just to share your data, it's much better for new entrants and new fintech players like to kind of like price risk better, to provide like tailor-made services. So this open finance initiative in Brazil became also a flagship project because it was benchmarking early on with Europe, but also with UK. UK was the first one to launch Open Bank and Open Bank initiative. Right now in Brazil, it's 10 times bigger than the UK's initiative, right? And it has like tens of billions of API calls, and also became a benchmark for regulators. And most recently, Brazil is launching a third big initiative, which is called DREX, which is the Brazilian CBDC initiative. This one is a little bit different. It goes beyond payments, right? because Brazil addressed quite well payments with PIX, which the instant payment rails. The data part, which is very important, was being addressed by open finance, but the next frontier was like broader financial services, right? So like capital markets, different types of financial products like credit, collateralized lending. So what Brazil is putting together is also a new rail. It's like an infrastructure system, but it's blockchain enabled, right? It kind of like unlocks a huge wave of opportunities because it's like a tech stack shift. So if you think about like cloud computing and other types of like stack shifts, right? They're like major opportunities for new business to come together, but also there's like a major unlock in terms of business models, right? Because you have like new toolings, new possibilities. With blockchain, you have smart contract programmability, a lot of like the innovations that comes from public blockchains, centralized finance will be happening like mainstream at the core of the financial industry. But Brazil is not the only one. Maybe it's the one that's like ahead of the curve, and even other central banks like and the BIS, which is like international organization. We call like the bank of the central banks, that where the central banks convene. We have more than 60 central banks there. And recently launched a report about this type of initiative, mentions Brazil as the global leader. So it's quite interesting to notice that an emerging market in fintech, right, and policy regulation and digital public infrastructure is like leading the charge on a global level, and it's a major opportunity as well. So that's maybe like we can relate a lot with Singapore, because Singapore is doing a lot with these types of like technologies and similar initiatives like Project Cuban, Project Guardian, GL1, and like I think a lot of like regulatory coordination as well. But it's like a smaller market, and something that we notice is that the opportunity just to and even like people and the private sector in Singapore see this opportunity, right? Because of like similar tailwinds in the regulatory side, in the infrastructure side. Some of the companies that are building for this in Singapore or like smaller markets in Southeast Asia had the opportunity to just go to like Brazil and use as this kind of like top 10 economy, 200 million people economy, right, as a beta market, a launch pad for fintech innovation. But of course we see this playing out like in broader LATAM, and we can speak and go into specific countries throughout this conversation, and also like to other regions in Southeast Asia, Indonesia, Thailand, and like many others. Happy to kind of like deep dive. Let me stop there, Kristie, because I think I said a lot to unpack.
I was actually going to throw the question back to Qin En, especially when it comes to regulation, because if you talk to a lot of fintechs in Singapore and Southeast Asia, and especially once the conversation starts going into areas like CBDC, Web3, regulation in Singapore and Southeast Asia has been a little bit of a forward backward kind of journey. I can see that in LATAM they've been a little bit more ahead. I'm happy to, if you can kind of outline in specific detail what aspects perhaps that they have been able to kind of define certain definitions and categories better than some of our Southeast Asian regulators, because like it or not, like fintech is going to be a regulated sector, and until you are able to kind of outline very clearly this is a security, this is not, then you that's the only way you can really enable true innovation to take place. So what were some of the takeaways for you? And I'm sure you've had conversations with the regulators too over the years. What were some of those conversations like?
No, I think that's really sort of, it comes down to 2 or 3 points, right? I think the first point, it comes down to the regulators' independence from what happens on the political scene. And unfortunately, for many countries, and not just in Southeast Asia, but also in LATAM, Brazil is the exception, where the regulator and the central bank is extremely sort of independent and separate from politics. I think it doesn't take much to know that Brazil's politics is challenging, to say the very least. But what is very obvious over the past 2 decades is the competence and the independence of the central bank in continuing to push forward agenda, continuing to innovate, right? It goes without saying, it's a cliche to say that innovation takes time, right? It takes startups to grow, technology takes time to mature. So in order for this to really work out, regulators need to have that steel within them, and they really need to have the long-term view that it's independent of whatever that happens on the political scene, right? Which obviously sort of it's dynamic, it's challenging in these emerging markets. So what we see often in many of these emerging markets is when there's a new leadership, there's a new president, there's a new prime minister, there's a new agenda, like entire sort of the previous administration's work gets redone, gets reset, or like there's a huge step back, right? And so we are in this phase where it's like 2 steps forward, 3 steps back, or sometimes 3 steps forward, 2 steps back. Whereas I think where Brazil has really excelled, and which is why I say the light at the end of the tunnel, is a central bank that has over the past 2 decades just been so consistent, right, in fostering innovation. So that's the first point. I think the second point that really stood out for Brazil for us, it's the difference between PR and walking the talk. Right? What I mean by that is that often a lot of regulators love to proclaim we are pro-innovation. I mean, practically no regulator today would say we are anti-innovation, right? But let's really look at the data. Let's really look at the regulations. Let's look at the license applications you're granting to these startups, right? Are you truly enabling new participants to come in to compete to the market? And to be honest, that's a very discomforting thing for regulators to take, because you are welcoming disruption and innovation when your job is to provide stability, right? So it really takes competence, it takes confidence for a regulator to say, okay, I'm going to potentially piss off the banks, piss off the incumbents, and I'm going to let startups potentially come in and win this market share, right? I think that's really sort of the big chasm that we have seen Brazil really been able to cross, whereas in places like Southeast Asia, it's always a push and pull, right? On one hand, you want to encourage innovation, but then the people who drive your financial ecosystem, the guys who provide the stability, the day-to-day, aka your big banks, your big asset managers, your incumbents, will of course push back, right? Because they don't want to fight against this competition. At the end of the day, who do you listen to? Do you want to disrupt the status quo and disrupt existing players, or sort of risk that? And I think the story of how Nubank even happened, I think that's something maybe Bruno can talk about, but that really just happened because of those 2 things that happened, right? Firstly, a central bank and a regulator that's relatively independent from whatever that happens on the political scene, giving that stability, and secondly, truly creating pro-innovation.
What do you think that's going to mean for Southeast Asia, at least for some of the fintechs and people who are doing like truly exciting stuff, whether it's in Web3 and crypto? I mean, we've seen a bit of a global migration of talent over the last few years.
Correct.
I mean, I sit out of UAE mainly, and Dubai has been definitely quite aggressive on certain aspects, like especially real world assets, tokenization, fractionalizing specific types of asset classes, that sort of thing. And the fact that they have a dedicated agency just to look at virtual assets is not something that you see in many countries. What do you think that's going to mean for the migration of talent? If everybody wants to be the ecosystem that has, coming up with the best fintech innovation, right? Where do you see this kind of going?
I think it's becoming very obvious to the founders in terms of talk versus walking the talk, right? And I think that's obvious, for example, in the very practical things of when startups apply for licenses. So what people are starting to know is that these usual jurisdictions that perhaps have very strong branding, very strong PR capabilities in crafting the idea that they are, positive places to do, people are starting to dig deeper than that, right? And people are asking, okay, in the past 12 months, how many licenses for, let's say, digital assets do you actually approve, right? Have you set up clear parameters for people to apply, let's say, to define what a security is versus not a security? So I think essentially what we're seeing is people and founders and builders and investors really cutting through the fluff, right? And really asking, show us the evidence that you are committed to innovation. And I think it's naturally capital talent will flow to the jurisdictions that actually walk the talk. And that's actually, honestly, for us at Credit Saison, why we are so excited, right? Especially from a venture capital perspective, because we truly see the innovation already happening and blossoming in a place like Brazil. Therefore, startups are able to thrive, capital markets are able to flourish. And I think that's really the picture we want to paint back home for Southeast Asia, right? That, look, you can't just rely on the PR story, on making a couple of announcements and not following up on them. You really have to walk the talk. Earlier, Bruno mentioned about Pix, right? But I think people don't understand how massively successful Pix is. Pix only launched in 2019 or 2020, right? Just before COVID. And within 5 years, they hit 70% adoption in the whole Brazil population. Keeping in mind this is a 200 plus million population, and keeping in mind that Brazil has a land mass that is twice as large as India, right? It's a massive country.
Wow.
And to get 70% adoption in 5 years, this is literally textbook startup growth, right? It's literally the J curve. For context, India UPI only today has about 30% penetration, and UPI launched, I think, in 2016, right? So you're talking about something that's 10 years. So I think I think really people are looking for these signals, right? Of true competence, I would say.
30% is pretty low. I'm quite surprised that UPI is only 30% penetration.
Yeah, but it's a billion population, to be fair, right? So it takes a while to get there. Yeah.
I mean, it's always been kind of like the case study, right? That people tend to kind of go back to, especially when Indian tech, founders tend to talk about the ecosystem. So, Sorry, Bruno, back to you.
No, perfect. No, thanks so much, Qin En. Feel free, Kristie. I think you're about to ask a question, right? Or I can complement Qin En's comments as well. Happy to kind of like go in both directions.
No, go for it.
Okay, perfect. No, so just to highlight a little extra info about Pix, right? So as Qin En mentioned, right, it launched around 2022. So roughly it was like a huge 2020, but it was like a huge acceleration J curve, right, as Qin En mentioned. And I think like people just are not like aware that there's like a evolutionary roadmap as well, right? So like Pix was handling a lot of like P2P payments in the beginning. It was like a massive adoption. It was like an explosion, and just like a couple of years, we onboarded more than 70 million people that were underbanked on or did even have like a digital bank account. It was like a massive financial inclusion and push. So, but we noticed that it was like opportunities to also deliver new features, right? So like new rollouts, recent rollouts, and we're probably going to be seeing a lot of like credit on top of Pix, right? Type of like buy now, pay later models, and where you can pay installments. And usually when you're like using a credit card and you're paying installments, like a buy now pay later model, someone is providing the credit, right? Like in the credit card, like the issuer bank is like just like granting the credit on top of the card network, right? Like a Master or like a Visa. But it's if you just have this kind of like the same flow, right? And like a very similar rail, and you can just provide like a very similar user experience, right? Because with Pix, of course you can like do QR codes. But there's like new features that you are able like to like do tap and pay, just like tokenize a Pix as you have like a credit card in your cell phone, right? So the user experience is pretty much similar to a credit card right now. And the banks, of course, like they prefer to use like a rail that's much cheaper, right? Because in like the kind of the alternative is to pay like a higher fee to a card network or using a digital public infrastructure almost at no cost, right? And just like give back this kind of like fees to the end users, right? So I think like beyond like P2P money movement and like basic payments, P2 merchant will like become huge, not only because of the new UX, but also because of this kind of like similar approach that banks will provide credit on top of those rails, right? So I think like it's massive to think about beyond regulatory frameworks, right, and regulatory innovation. Think about like digital public infrastructure. So maybe like Pix and UPI, as you mentioned, right, are flagship projects. But there's a kind of like a conjunction of other initiatives that make the ecosystem so interesting. So maybe people don't know, but there's like a World Bank rank that's called GovTech Maturity Index. So it ranks 194 countries in terms of GovTech maturity, like from financial rails to identity. So Brazil's ranked second, only below South Korea. And this is just like a nice setup for like fintech company, for startups to build on top, right? And you were mentioning about blockchain adoption and regulatory tailwinds. Qin En was also mentioning about the central bank independence And what I see like in other jurisdictions as well, sometimes you see a lot of regulatory fragmentation, right? Even like in the US, you have like different regulators, like state level regulators, federal regulators, even the federal level, right? Like, you have like a regulator for the federal banks, which is OCC, SEC for securities, CFTC for commodities, different financial regulators in different states. So it's good because in terms of like state independency, but in terms of like regulatory coordination, it's like a mess. Maybe one of the reasons that Brazil and other like countries that like have a similar setup are able to kind of like, move faster is that if you have like an independent and technical central bank, which doesn't like get captured by the federal government, and it has like a broader mandate, right? Because in Brazil, the central bank regulates a lot of different types of financial assets, financial market infrastructure, banking supervision, and most recently, back in 2022, it also there was like a new law that gave the central bank the mandate to regulate crypto, right? So beyond like banking, financial service, and financial market infrastructure, now the central bank also regulates crypto. There's new regulatory frameworks to be issued around virtual asset service providers, stablecoin issuers. You mentioned RWA as well, like Kristie. I think major interplays between public blockchains, many activities that we see on top of DeFi, and also even like people doesn't think they don't think about this, but CBDC initiatives, depending on the kind of like the format, right? Sometimes it's more related to infrastructure than like payments, right? Because you think about CBDCs, people usually think about central bank digital currency, right? So they associate with payments. But at the end of the day, there are many central banks that are pushing to the wholesale, I think, format of CBDCs, which kind of like enables this broader tokenization of the economy, kind of massive type of like issuance of real assets, right? So that's going to happen in Brazil shortly, hopefully. And it also intertwines domestic infrastructures like DRAX, but also with public blockchains, right? So if you think about like central banks like Brazil and others are usually adopting technology standard that we call like EVM, which is Ethereum Virtual Machine compatible, right? Many blockchains, I would say like 70 to 80% of all public blockchains use this type of like standard, right? So there's a lot of like opportunities to just like pick open source technology that are deployed on top of like permissionless rails, right? So Ethereum, many other networks, right? So people just like go ahead and deploy, they create like a financial product, they don't have access permission, right? So it's like a very fast-paced innovation environment. But since it's the same technology and standard, you can just like get this like crypto native companies and help them like just like deploy into more kind of like regulated environment, work with banks. And they're like a massive initiatives just like happening here right now with
how
major.
How would you actually categorize your sub fintech categories right now? I'm sure there's also been a bit of evolution in the last 3 years, and moving forward, like where do you see in terms of deal flow, where do you see what are the categories, and where do you kind of see the most deal flow these days?
No, for sure. Yeah, I think they're like a lot of like layers, as you mentioned, right? So like from payments, for instance, a lot of opportunities on what we call open finance. There's like the very associated with new regulatory regimes. There's like a new regulatory framework called payment initiation, right? So, for instance, it enables a lot of use cases. And what we've been seeing here in Brazil is that what we call conversational banking, right? So like, because of the kind of like the most used interface, usually social network, like a WhatsApp type of app, right? In Brazil, WhatsApp is massive. And because you have, for instance, new technologies and that you can leverage, and new like infrastructures, and frameworks like open finance and blockchain, right? What's happening in Brazil is that you can just like have like a bank account happening only inside of WhatsApp. For instance, you have like an AI layer for reasoning, so you can like ask anything that you want. And because everything is interconnected through open finance, right? You have like data from all of the banks and the financial players and the fintechs, but also can do like money movement through this kind of like new regulatory framework that's called payment initiation, right? You just have to connect your bank accounts. You maybe have like two, maybe like 5 bank accounts. Just connect your bank accounts into WhatsApp, And then you just like, because you have Pix, right, which is kind of like a unified payment interface. That's something that's called Pix keys, right? It can be like an email or a telephone or an ID, right? You just have like to enter this Pix key, and that's okay. Send like 10 reais, which is the Brazilian currency, right? To Maria, and here is her Pix key, right? And and because it's all interconnected through WhatsApp and through the integrations of Open Finance, you get like your balance from like one of your bank accounts directly, and then it gets pushed to Maria. But you also can go much beyond payments, right? You can like do investments and ask, okay, what would be like the best investment? Because you have like this AI reasoning layer, right, with LLMs. You can like curate investments opportunities through Open Finance. You can reason and just like select the best investments, and you can get like the balance from like different banks and invest in different products. You go like much beyond. The opportunities will grow a lot, and much beyond this like basic use cases with Drex. Because if you think about that in the next chapter, right, all the economy will be tokenized. You're gonna have capital markets tokenized, commodities, real estate, financial services, like securities in general. Everything will be tokenized. You'll be able to just transact, just asking questions and having like a natural conversation through WhatsApp. It's already happening. You've been seeing like Itaú, which is the largest retail bank in Latin America, Nubank, as Qin En mentioned, right? All those like major banks have this like WhatsApp interfaces. You have like fintechs going there as well. So this is like one of the interesting trends. But on the infrastructure layer, like interesting opportunities as well, especially maybe Qin En can complement me here, right? So we've been seeing a lot of opportunities in terms of like credit, and like a lot of fintechs providing credit through an interesting market setup, because you have something that's called receivable registries, right, in Brazil, where all the kind of invoice receivables, credit card receivables are registered, and you have like the ownership, like a ledger, right? And you can just like change your ownership and like create like services on top, and you have something that's called FIDICs, right? Kind of like credit funds in Brazil, and like I think a lot of the lending activity is like moving from the banks to capital markets, right? So it's quite interesting trend through this FIDIC infra, right? And they're like just like companies providing services to streamline these operations, like helping the fintechs set up credit funds, connecting them with receivable registries, like making the UX and the whole experience much easier. This is more on the infrastructure layer, right? And I think
what does it mean? Sorry, to stop you there. I was just thinking, like, what does it mean in terms of the numbers when you look at, say, adoption, say customer and client adoption and speed to monetization, especially in day and age where this next generation of startups are just going to be monetizing. There's a bit of a compression in terms of the speed to be able to monetize. And if, given all of this infrastructure has already been laid, I think this should be accelerated even further, right? Do you see that kind of being compressed even much more than before?
Yeah, I think there's you have to, if you're like a fintech founder, you have to understand where the value is accruing, right? Because some of the layers, sometimes like public infrastructures, right, and it will be like commoditized, will be like become standards or like even like protocols. So maybe the monetization won't be there, but I think there's massive opportunities, especially on the credit piece, right? Because the margins are higher. And I think this kind of shift between like banks to capital markets type of like lending, and what is that we call like vertical lending, which is quite interesting, right? It's playing out very strongly right now. For instance, if you think about like what are the software modes, right? Maybe with AI, the barrier is like lowering, right? To produce like software, but I think if you're like just having like a nice user base and you're providing software like a specific vertical, like education, healthcare, like any type of vertical, right? You have like interesting data insights, right? And sometimes you have like a large enough user base that you can monetize through like fintech services, right? And because in countries like Brazil, sometimes you have like easier fintech licenses, right? That they're like very modular. Even if you're doing like just like payments, sometimes you don't even have to apply, right? Just to kind of like lower the entry barrier. Depending on the volume that you're transacting, right, on the balance of your clients, you just like you can just like go ahead, start to provide services. But at some point, and that's why we've been seeing like different players from different vertical, even software players like becoming like somehow like fintechs, right? But going back to the vertical lending piece, I think because data is like a nice moat, right? And like data insights, and also the relationship that sometimes you have with the client, right? Because you're like very integrated into a client's business, give an edge for you to provide like credit, right? Because because the capital markets piece has become easier for fintechs to tap, right? And we've been seeing a lot of like software players just like putting together FIDICs and like leveraging the data and the relationship that they have with their client. And because sometimes they're like one of the strongest players in a specific vertical, they just leverage this whole dynamic and like become like a fintech. It depends on the volume. They sometimes apply for a credit license, or they do like through a partnership, and maybe that's something that Qin En is also quite interested because of the credit experience and the presence of credit Saison in Brazil. And now let me stop here. Maybe it would be like good to pick Qin En's brain on this one.
Is Qin En there? Hello?
Yeah, I'm here. Yeah, so I think just see whether you had a question, right? Look, I think definitely sort of to Bruno's point, for us, what also impressed us is about the structure. For us to come in as Credit Saison is primarily our business is in private credit and lending, right? In particular, we found that the regulations and the market structures were very mature that allows us to take risk or take less risk, right? In what is arguably considered a very risky market. Take for example, we lend a lot to fintechs, right? We provide debt capital. But I think the truth is, as we have seen in many emerging markets, often there could be potential integrity deficits, right? In terms of how founders use this capital. I think what Brazil has done really well is to create separate, independent legal structures, what we call FIDICs, that basically it's run by professional licensed third parties. So how it works is we never send that money in Brazil directly to the company's balance sheet. Instead, a separate entity is set up, and this entity is actually managed by third-party licensed players, and we send that money to the entity. Critically, the company that we are partnering with, they also need to send their capital, and their capital is first loss capital. So this really sort of it sounds so simple, right? But it just really aligns everyone's incentives, because today the company is incentivized to, let's say, run their lending, run their risk properly, because if they don't, the first loss would go to them, right? Secondly, the risk of fraud is a lot lower because we are like this capital doesn't go onto the balance sheet. Like this capital that we lend goes to whatever purpose that we lent it for. It doesn't go towards like buying a nice house, a nice car for the founder, right? So I think really just simple things like that is enabled because of the regulatory structures just makes it a lot more easy and appealing for foreign investors to come in. And look, to be honest, we are new to the market, right? 2 years ago, we had zero presence in LATAM, but precisely because there are these structures combined with a strong local talent base that we have, that really help us to grow very quickly. So even though sort of we are relatively new to the market, to date we have done more than 20 debt investments in Brazil itself. And actually a lot of those companies are also Valor Capital's portfolio companies. So really that was also the basis of our partnership.
What do you think is next for the Southeast Asian fintech ecosystem, though? I mean, I think there have been, Singapore has done a couple of these like open banking, sandboxes, a couple of these initiatives. I know it's been a bit different across different markets, but as you mentioned, and I think we both know very well, I think the fintech ecosystem in Southeast Asia has gone through quite a lot. Are there any bright spots at all?
Yeah, I think fundamentally it takes time for trust to rebuild. I think unfortunately Southeast Asia is going through a deficit of trust. Now, the rebuild of trust naturally just takes time. And I personally think it's not going to be a quick fix, it's not going to be a short term. There are definitely things that can be done by the markets, by the regulators, by the government, by everyone to sort of accelerate the rebuilding of trust. But unfortunately, this is the kind of thing that, like a promise once broken, you need to take time to sort of build up that goodwill again, right? With the party that you sort of broke the promise to. So unfortunately, I think this is going to be the situation, right? Where it's going to be more a medium. When I say medium, something like 4 to 5 years before we sort of start, we see a meaningful recovery for where things are. unless there's certain interventions by regulators, by governments to really sort of accelerate the rebuilding of trust, right? And I think some of the acceleration, once again, Brazil has outlined what it could look like. For example, things like creating external structures where, let's say, it just removes the possibility of integrity deficit, right, behavior. So I think that's really sort of the reality of it. The question is whether governments, regulators, and of course the market itself can rally together quickly enough. Otherwise, I guess it will just be a slow and painful recovery.
The FIDIX, as you mentioned, is the FIDC.
Yes, FIDC. Yes.
Yeah. Can that be executed in Southeast Asia context, or do you think?
I definitely do think so, but it takes, like I say, regulatory competence and confidence. I think those are the two things that it definitely would disrupt the market. People will complain, people will fight against it. And look, the truth is it does add on a layer of complexity, right? You are bringing a third party to the picture. Today, let's say I am an investor, you are a founder. We could have structured the deal ourselves, right? And sort of sign off on that. But whereas in the FIDIC structures, you need to involve the fund admin, you need to involve the fund manager. There's more cooks in the kitchen. So of course, people are going to complain about it, right? On both sides, actually. But really, it takes, like I said, confidence and competence to believe that, okay, this is something that we want to do and we're going to implement it. And I think to some extent, we have seen that in India, right? Where the regulator takes on a very sort of, sometimes people see it as austere, but I do see it as like decisive and effective approach, right? Where they see certain things that are not happening in place, they know it's going to cause the market to hurt, they know that it's going to cause losses, but in the grander scheme of things, this is a decision that only the regulator, the central bank, can make themselves, right? Because no one else will subject themselves to such more additional overheads and burden.
Yeah. Maybe the other question for Bruno, I mean, I'm pretty sure in LATAM, in Brazil, different parts of the market, there must have been a lot of these like bad actors, I'm pretty sure, like, fraud. This is something that comes part and parcel of every emerging market ecosystem, right? I think the question really is, what is Brazil's and LATAM's approach, regulators' perspective and approach towards risk, and how have they kind of tried to guardrail that? Because the regulators always trying to guardrail that, but you still want to ensure that there's ample enough room for innovation and for some of these newer, models and setups and structures to be able to formulate. How do they view it differently versus, some of the other regulators that they've seen?
Yeah, perfect. No, I think sometimes you think like there's like a trade-off, right, regarding like avoiding risk and the steps of like players like entering the market, but at the same time being able to kind of like be open towards innovation and welcome like fintechs and like new business models and crypto, right? But there's not, to be honest. I think you can like just be kind of like a strict regulator in a sense that you want to have like a very solid KYC, AML, CFT setup, right? You want to have like clear structures to avoid bad actors, right? Just to have an opportunity to go for it. But at the same time, you can just work, especially, and that's something that I think I learned a lot, being like open to innovation and be able at the same time to deliver, I think, well-rounded regulatory regimes, right? It's just a function of like being able to kind of like co-create with the market participants, right? Because sometimes just central banks just avoid innovation because of the risks entailed, right? As Qin En mentioned, right? But if you just like spend time with market participants, truly like understand new entrants, like new players' demands, but at the same time have like a honest conversation with incumbents and like big financial conglomerates, right? You get there, right? It takes time. I would say that, for instance, sometimes you see like peaks, right? Just like launching and scaling quite fast, and as Qin En mentioned, right, it's like actually was like a J curve, and open finance becoming the largest open finance scheme in the world, and maybe with Drax, right, with also on the frontier of like technology. How we got there, right? It took a lot of time, to be honest. Those initiatives started back in 2016, 17. And because I think of central bank independence, they're not necessarily attached to like a federal government, a specific president. They just like kept going, right? So I think just taking the time to truly understand the opportunities, really like getting deeper into the technology. But I think spending, I think, the necessary time with the market participants, just to kind of like shape up all the edges, get you there, right? So I think, of course, if you're like rolling out a new regulation and it's like a new market, right, there'll be like some back and forth, and there'll be like bad actors. But if you just like keep fine tuning, you just avoid massive like problems, right? So I wouldn't say there's actually like a trade-off. And maybe just like being open towards innovation, but at the same time being I think very detailed, and also addressing, I think, the major risks regarding any kind of like new initiative. You get there, but I think the message is just takes time. There are a lot of like R&D in this process, right? A lot of like interface with the market participants, but it's possible to have like both worlds. But I've seen, of course, like different dynamics with different central banks, and there's, of course, different risk appetites and different, I think, cultures involved, right? And what happened in Brazil is just, I think the banking sector, they were like fairly sophisticated. Maybe, I don't know if you already heard about this, right? But back then there was like a massive concentration, and there's still like some concentration around like major FIs, right? In like different financial verticals, right? And because of like some restrictions related to imports, right? In like former governments, right? Like many years ago, we didn't like Brazilians didn't have like the possibility of having like imported PCs and computers and like technology in general, right? So what happens is it's like very curious like dynamic here in Brazil is that somehow like banks, because of like macro volatilities, right, like high inflation, and they had like just like be very technology driven, just to kind of like to reduce the risks and to understand the market dynamics. And at some point, because of like import restrictions, some of the banks became the biggest producers of like computers in Brazil. So like Itaú had like Itaú Tech, kind of like a whole like PC factory division. They're like just like selling for retail. So it was like a little bit of like crazy and unusual dynamic. But just like to summarize and illustrate, the FIs in Brazil they're like fairly sophisticated when it came to technology, right? At some time, of course, things like got better. We had like more visibility, and have like inflation target regime, so inflation was tamed. And then there was this new phase where the central bank opened up a lot to innovation, right? And because of like the broader mandate and the independency, it was like possible to have this coordination. I think, as Qin En mentioned, right, at first, sometimes when you're just like pushing these agendas, right, there's like a new competitive dynamics, and not necessarily like the incumbents are happy about it. But at the end of the day, what we noticed after all of this kind of like successful projects was that the pie, right, it grows. So maybe like a bank will like lose some of the revenue streams, but now we have like 70 million people that didn't have like digital bank accounts. A lot of fintechs are servicing SMEs. So like new market, new clients, right, new segments and new opportunities, and also efficiencies, right? Because sometimes if you're doing like a very siloed, solution, right, and just like catering to your client base, you can kind of like retain your client base. You can avoid competitive pressure. But if you're really like open to innovation, right, and working with the regulator and also embracing it as a company culture, right, even if you're like a large FI, there are like a lot of opportunities, because people usually don't think about network effects, right? What's happening in Brazil and in other countries, right, with those like new rails and new frameworks, right? We're creating open loop ecosystems. So like prior to Pix, for instance, we have like digital wallets coming into the market. The banks were like creating this type of like solutions, but we didn't have this common rail, right? This common regulatory framework and the rule book. So we had like to withdraw and then top up to kind of like move money between players. Now we have this kind of open loop ecosystem. The same with open finance, right? Even though it's easier for someone like just to move money and for like a competitor to access your data, as like an FI, you can like also create some kind of like dashboard when you just like aggregate all the banking information between different relationships that your client have. You have like better underwriting because you know the banking history, you know better the risk profile. Just gets better for everyone, right? And with Drax, you're gonna have like mobility on the asset side, having like assets like moving RWAs, as you mentioned, like Kristie, just like moving between venues and market participants. So these open loop ecosystems create like massive network effects. So of course there'll be like maybe some big FIs will kind of like keep winning because they embrace the innovation. Others will become like less relevant. But at the end of the day, the pie grows to everyone. And from project to project, I think even like the largest FIs that maybe sometimes were a little bit more reluctant, they just like embraced it. So if you come to Brazil, you're gonna see very interesting dynamic, a lot of openness toward innovation, even with the big players. So it's different when you go like to other countries. So that's I think something special, right? And in terms of like VC opportunity, as Qin En mentioned, right? If you look across the globe, maybe if you look back like 20 years ago, right? 90% of all the VC money was going to US-based companies. Maybe, I don't know, like 10 years ago, 12 years ago, it was like 70%. Now we have like more capital going, being deployed outside of the US than the US. But still, it's like it's not necessarily like this capital's coming to Latin America or Southeast Asia, mostly like European Union, and like countries like UK, Germany, and of course like China, India, and Israel. If you take all of those countries that I mentioned out, right?
Yep.
Only 4% of the capital is like flowing to other markets, which is very like small, right? So if you look at the market dynamic here in LATAM, you have only a dozen funds that have more than $100 million of assets under management, which is like pretty small. If you look like across US, you have almost like 800 funds with more than $100 million to deploy. Like India, you have like 40 funds. China, 400 funds. Even like Southeast Asia, you have like almost 50 funds. In Latam, you only have like 12. And the market's massive, right? It's like in terms of like GDP. Like
Actually,
twice.
now that you mention it, I'm wondering if you're beginning to see more Asian investors start to invest in LATAM. I mean,
100%.
Saison is already one of them, but do you see more of them start to enter the market?
Yeah, sure. I think it's like a more recent dynamic. Of course, we had like some early investors coming from Asia, Southeast Asia, more broadly. But I think like most recently we've been seeing some. Qin En and Kristie Saison they have been amazing partners, and we are learning a lot. I think this is also a new kind of like region for us, and having this kind of relationship from the early start. And we're trying to be as helpful as we can in the Latin region, and we're learning a lot about Southeast Asia and being introduced to many interesting people. Thanks to Qin En and the team at Kristie Saison and Saison Capital. I think this is amazing. It just like opens up a lot of like opportunities, right? So even like in terms of like investments, we're mainly restricted, not because of like the fund thesis, or I think is very related to LATAM and US, right? But we mainly restricted to this corridor, and we're trying to expand, right? Recently, we did an investment in a Singaporean company called Partier, trying to expand the corridors, right? Because if you think about like financial rails, financial market infrastructure, even like blockchain, it's like global, right? And maybe it's the infrastructure piece is key, right? Because if you're like truly like opening up corridors for businesses, right, the money flow is very important. So that's why we've been seeing these trends in terms of financial rails, but also in terms of like stable coins, right? There are a lot of activity around stable coins in Latin America. Maybe Qin En can also complement here. But for instance, if you see the largest deals that are happening in the US, right? Bridge acquisition by Stripe for more than $1 billion, right? A lot of activity like Rain, like coming to Latam, doing a partnership with Stripe, using stables for credit card top up. That's why it's like Latam is like the target market, because a lot of the stablecoin dynamics and crypto, I think ecosystem is developing faster here in the region, right? So we have like a lot of interesting players in Argentina, Brazil, Mexico have like some investments in Bitso, in Onco,
But in terms of your mandate, like outside of LATAM, like what kind of deals make sense for you, and do you see that being a growing proportion of your investment allocation?
Yeah, I would say like roughly LATAM represents like 80 to 90% of the portfolio, right? But I would say like from 10 to 20% we can go cross-border. And I think usually, even though sometimes we invest in US companies and now in companies in Southeast Asia, potentially in the Middle East, having this kind of Latin angle to help them land and expand in the region is pretty important. I think on the crypto side, we have like a vertical here at Valor that we call emerging tech, right? Which kind of like encompass crypto, blockchain, AI, and any type of deep tech investments. So these types of like emerging technologies and the business that are pursuing these opportunities, right? They usually are more global, right? Because they're not necessarily like attached to a region. I think Valor has been doing this, especially in crypto early on, with like investments in Coinbase and then in Circle, which became very relevant to the fund. Of course, these were like US companies trying to come to Latin America, so that was the angle. But I just like kept going, right? So the portfolio, the blockchain portfolio, grew a lot throughout the years. So now we have more than 25 blockchain-related companies out of 130 portfolio companies. And of course, even though Valor is a journalistic fund, because of the tailwinds that we have in Brazil and some countries in Latam, I would say like roughly like 40%, 50% of the fund is somehow like fintech related, and the AUM just like keep growing, because even though sometimes if you start like more generalist, right, deploying capital in different verticals, because some of these investments sometimes they grow faster in the fintech side, the AUM becomes more the fintech related, right? So there's definitely like a lot of opportunities on the fintech side in Brazil, but on the emerging tech side, we're doing like interesting investments as well. I think there's a potential, because I think the founder culture here as well in LATAM, like we have like amazing founder culture in Colombia, in Argentina, in Brazil, Mexico. I think there are like interesting tailwinds and dynamics between the US, right, in specific sectors, right. We try to tap opportunities depending on the market dynamics, right. But on the AI side as well, we've been seeing like companies even like building here in Latin America and expanding to Europe, to the US, and even like fintech companies, right? Because if you look at the whole dynamic here in the region, we have like amazing companies, as Qin En mentioned, right? Nubank became like the largest digital bank outside of like China. You have like more than 100 million clients only in Brazil, Mexico, and Colombia, right? Mercado Libre, also founded in Argentina, became probably the largest tech company in Latam with $120 billion of market cap. But of course, we have like on the fintech side, XP, Stone, and quite interesting acquisitions as well, right? So have like companies such as Pismo, that was like a Brazilian infrastructure company that was acquired by Visa recently by $1 billion. We have like 99 that was sold to Didi, the Chinese company, by more than $1 billion. Alth on the identity side was sold to Okta for roughly $6 billion. So a lot of like activities here. I'd say like Brazil is still like the largest market. We have roughly like 25 unicorns here. At Valor, we were able to capture 20% of all the fintechs in the region, and we also underwrite with this idea that Latin companies can go global, right? So, for instance, Gympass that became WellHub. Don't know if you're familiar with this one. Now it's like in dozens of like global markets. We started here in Brazil. CloudWalk, which may be a next generation type of like merchant acquirer. We at Valor invested in Stone, which was listed in Nasdaq. Well, at the time was the largest fintech company listed in Nasdaq during their IPO. But now CloudWalk is becoming like a massive fintech company, going to the US, going to UK, Australia. So we're seeing Brazil and like Latam more broadly as a launch pad, especially in the fintech market, right? Nubank expanding to Southeast Asia and Asia more broadly. They acquired the Time Group, right? So we do see these connections like evolving, and of course you can go, if you go over the portfolio, there are like many companies starting to explore Hong Kong, Singapore, and different like regions, much beyond like LATAM, right? And just wanted to understand also what are the opportunities to underwrite and to invest in support companies that are founded in Southeast Asia and help them like expand. The same playbook that we did with US and LATAM. And that's why having partners such as Qin En and Saison Capital is very important for us as we kind of like learn to navigate this.
Yeah. Maybe last question for Qin En. I mean, for Saison, I mean, how much is ex-Asia part of your allocation, and what is the way in for you guys? I mean, you've already been in LATAM for the past year. How is the strategy evolved?
Sure. Actually, more than half of our capital deployed is in the past 12 months actually is to Brazil in particular, which really reflects our strong belief in the region, right? And this is on top of the $100 million that we committed to Brazil, and actually another $100 million to Mexico on the debt front. That was when we launched. So I think overall, as an entire organization, clearly, LATAM is. I think firstly we are not tourists, right? I think that's something that we really want to communicate, and we also take a lot of precaution around. We hire local teams to run the operations, knowing that it's ultimately locals who know the market best. And we find strong partners like Valor and Bruno and his team to really help us access over there. There's actually quite a lot of exciting plans for us to not just be pure investors, but to actually go deeper into the capital market stack, which will, of course, these plans will take some time to materialize. But I think, long story short, it's a market, it's a region that we are deeply committed and we're excited to. And in fact, we are also just bringing a lot of those learnings, a lot of those insights to our portfolio, our founders here in Southeast Asia, right? Where we are able to sort of see what maturity of, let's say, a CVC lending fintech looks like. We think that that's a lot of learnings that these founders could look at. So yeah, I think overall we remain very excited about the region and also deeply committed.
What are you doing on the capital markets front?
There will be a time and place where we'll share that. It's still too early for that, but you'll be one of the first to know.
Okay, very interesting. All right. Thank you so much for your time, gentlemen. I hope you guys are doing, you have a great week ahead. And thank you so much for joining us. I hope to see the both of you again very soon.
Sounds good.
Thanks so much, Kristie.
All right.
Thanks for having us. Have a nice